Okay guys, now we are in question number 7. Okay, so you can see here that CCR Limited issued 25,000 debentures, okay, 10% debentures of rupees 100 each. So three different cases have been given. So this is your case 1, okay, this is your case 2, okay, and this is your case number 3. So case number 3, it has got two methods, okay, first method and second method. Okay, we will see both the methods. Okay, so let us see here. We have to prepare balance sheet also. Okay, so let us see properly. Okay, so let us have a look at the case 1. Now case 1, debentures were issued at a premium of 20%. Now we are issuing the number of debentures at a premium. Okay, so when we issue debentures at premium, we get SPR. Okay, that is your security premium reserve. Okay, so the face value of each debenture is 100. Okay, so the premium is 20%, so obviously the SPR money will be rupees 20. Okay, so 100 plus 20 will be 120. Okay, so the entry will be bank account debit to debenture application and allotment account. Okay, so this is your amount. Okay, and when we pass the second entry, this debenture application and allotment account will be debited. Okay, and this 10% debenture account will be uh, having the amount of 25,000 because company had issued 25,000 number of debentures at rupees 100. Okay, and this SPR will be credited with amount of rupees 5 lakh because premium money was rupees 20 on 25,000 number of debentures. Okay, so this is your first entry. Sorry, this first case. Okay, now the second case is company, they purchased machinery from a supplier. Okay, so this is your first entry when you purchase machinery from a supplier. Machinery account debit to supplier. Okay, so machinery real account debit what comes in, supplier personal account credit the giver. So supplier is a giver here. Okay, that's why we are having this particular entry. Okay, now when we pay off the money to the supplier, okay, we have to pay off to them rupees 28,000. Okay, but we have debentures of rupees 25,000 because 25,000 debentures, okay, 100 rupees is the face value. Okay, so it will be only 25,000. So what about the remaining amount of money? Okay, so what we have to do is that, let me take to this calculator. So at this point of time we have to do something like this. Okay, so what is the amount of to be paid to the supplier? 28,000 should be paid, right? So sorry, 28 lakh, sorry. So 28 lakh should be paid. Okay, now divide it by the number of debentures that you possess. Okay, so what is the amount it is coming? It is coming 112, right? Isn't it? So this 112, it contains both face value as well as the premium value. Okay, so 100 rupees is for the premium amount. Okay, and this 12 is the SPR money. Okay, so that's how you can get this. Okay, so here in this case you are issuing number of debentures to the supplier at a premium of rupees 12. Okay, so this is how you can obtain how much money you are paying off. Okay, or by dividing the amount of the debentures you can get the number of debentures also. Okay, so that's the method. So that's your case number 2. Now case number 3. So case number 3 has got two methods. You can see here I have highlighted using two different colors to show that there are two methods here. Okay, in time of examination you can follow any of the method. Okay, you are free to do so, whether you like first method or second method. Okay, in first method you will have only one entry. Okay, because the entry for I mean the second entry, it should be not be passed. Okay, there will be no journal entry at all. Okay, you don't have to pass the journal entry. Okay, but if you go for the second method, then you have to pass both the entries. Okay, so the first method, okay, when no journal entry is recorded. So what kind of journal entry? Have a look at the case. The number of debentures were issued as collateral security to the bank, okay, for the loan taken. Okay, now you have taken the loan from the bank. Okay, now the bank, it doesn't give you loan just like that. You have to give something in security. Okay, so that security purpose, you are uh, issuing the number of debentures. Okay, so if you go for the first method, you will not pass that particular entry. Okay, you will only record the amount of bank loan that you have taken. Okay, the amount of loan taken from the bank. Okay, so this is your entry when you take loan from the bank. Okay, since it is the first method, so in the journal, okay, it will be just like this: the bank account debit to loan account, and in the narration you will write that uh, the loan is taken against the issue of 25,000 10% debentures of rupees 100 each as collateral security. You issue the number of debentures to the bank, but you do not record. Okay, so this is your first method. Okay, now in the second method, you take loan from the bank, okay, and you issue number of debentures as collateral security, okay, but you record the journal entry. Okay, so this is your second method. So when you record that particular entry, the journal entry will be recorded as this: debenture suspense account debit to 10% debentures account. Okay, so in the second method, you have to pass this particular entry, okay, which we did not pass in the first method. Okay, now you have to prepare journal sorry this balance sheet, okay, in the different cases. So I hope you have journal, okay, journal entries in your copy. Okay, because it will be very much difficult for me to show you both this journal entry and balance sheet at the same time. So if you have not copied the journal entries, please pause the video right now. Okay, first copy the journal entries in your copy, then continue with the video. Okay, so this is your balance sheet, okay, and this is your notes to accounts. So in balance sheet, okay, we know the format already. Okay, this will be equity and liabilities. Okay, so I will only show the equity and liabilities portion. Okay, since it is the extracted balance sheet, so you can only show whatever is needed. Okay, whatever is that highlighted. Okay, so you could have shown the this bank also, okay, this asset column also, but I have not shown here. Okay, you can show. So when we issue the number of debentures at a premium, okay, so this premium money will be recorded under this head, reserves and surplus. Okay, as you can see here, we have under this um, reserves and surplus. Okay, under this reserves and surplus, there is a head called SPR. Okay, refer to the journal entry that you have just uh, copied in your copy. Okay, so reserve and surplus is 5 lakh. Okay, which is your SPR money. Okay, and the long term borrowings, okay, which has got note number 2, is your 25,000 10% debentures of rupees 100 each. Okay, 25 lakh. Okay, and if you show the asset column also, okay, out there you will write under the current assets, okay, cash and cash equivalents, it will be 30 lakh. Okay, and if you total this 5 lakh plus 25 lakh, it will be 30 lakh again. Okay, so you can show that way also. Okay, and if you make that, okay, uh, asset column also, out here in the notes to accounts you have to write one more number, that is number 3, okay, to show that there is cash and cash equivalents, that is cash at bank 30 lakh. Okay, so now for case number 2, for case number 2 I have shown both these. Okay, so just like in case number 2, you can show balance sheet also for case 1, okay, showing the cash at bank also, okay, you can show that way. So this is it, this is the balance sheet, okay. So this 3 lakh is the SPR money, okay. So for that we have to refer to notes to accounts, okay. This 3 lakh is the SPR money, okay, and this 25 lakh is the number of debentures that you have issued to the public, sorry, to the supplier for purchase of machinery, okay, 28 lakh. So this way you will prepare the balance sheet, okay. Now let me go to this balance sheet for the third case, when you are issuing the number of debentures as collateral security for the bank loan, okay. So this 20 lakh long-term borrowings, okay, let us have a look at the note, this notes, okay. So this 20 lakh is the loan amount that you have taken from the bank, loan from bank, okay, 20 lakh, okay, secured by issue of 25,000 10% debentures of rupees 100 each, okay, when journal entry is not passed, okay. So this is your first method, okay. It's very simple. Equity and liabilities, okay, main head non-current assets, sorry, non-current liabilities, under which you have long-term borrowings, okay. Under this you will write this loan from bank, okay, you can refer to this notes to accounts, okay. So this is your loan from bank. Now go to the second method, okay. When you record the journal entry, you have again same thing, long term borrowings, okay, 20 lakh, but notes to accounts will vary, okay. So if you have copied this first method, okay, for the third case, okay, in your copy, now you can see the difference here in the notes to accounts, that something is coming here, okay. So what is that? So loan from bank will be 20 lakh only, okay, it's very simple. Now 25,000 10% debentures, because you are issuing the number of debentures also, okay. When you take loan from bank, you are issuing the number of debentures also, okay, but you have to subtract it, okay, this less debenture suspense account 25 lakh, so ultimately it will be 0, and long term borrowings will be 20 lakh only, okay. So this is the balance sheet as per the second method, okay, and this is the balance sheet as per the first method, okay. So you are free to do whatever you want to do, or whatever you are comfortable with in time of examination.